So let's talk the economy and the stock market. And last week, the Fed reported the GDP had shrunk by 1.4% for the first quarter of 2022. And it missed the expectation of a 1% positive growth in its report. And the market, of course, has reacted since with concerns about recession. And we've been getting the question a lot this week what our thoughts are. And I think it's important, as we say a lot in these in our communication and in these videos, is to remain focused as a long-term investor. So number one, a recession is defined as 2 consecutive quarters in the decline of the gross domestic product. That is our economy's best measure for economic success or failure, for that matter. There was some good news in that report, though, that can't be missed. One is consumer spending is still positive, still grew at I believe it was 2.7 or 2.4%. Two is hourly wage growth is actually rising at a very rapid rate, which is hopefully helping hourly wage workers keep pace with the inflationary pressures that we're experiencing. So the economy is facing inflation pressures. It's facing high energy prices, the Ukraine-Russian war. There's a lot of factors that are really dragging down the economy. But it's a good reminder to consider that we do have recessions pretty regularly. About once every 5 years or so, historically, we have a recession in the economy. But recessions don't necessarily mean that stocks are going to perform horribly. Of course, when news comes out, there's always a short-term shock to the stock market as investors digest the recent news. But realistically, it matters as to whether or not a company can still make money, earnings. Can companies and corporations still produce earnings and grow their earnings in the current economic environment? And so far, while the GDP news wasn't great, there's still a lot of success in corporate America right now. There's still some pretty solid earnings. Now, that doesn't mean every company has reported solid earnings. That rarely happens. There's always some companies like Netflix recently, or even Google that missed their earnings report. That's fairly common. Corporations do miss earnings reports, but you're looking at a trend in the overall market to really determine if companies can still earn in the economic environment. And so far the trend is positive. Now, that doesn't mean that we aren't going to go through a lot of volatility. This year has been quite different than the last several years in terms of the volatility and in terms of the market growth or lack thereof. It's important that we stay long-term focused as investors, that we don't try and make short-term predictions in a portfolio that's really designed to achieve long-term goals. That, as we've talked about a lot, tends to create negative outcomes. We as a firm are focused on the long term. And when you consider a stock and bond allocation in a portfolio, multiple stages, which typically most of our clients have, especially if you're in a retirement income mode, we aren't trying to react to these short-term environments. It doesn't mean you don't experience fear. I think fear is quite common, especially for folks that went through 2008, 2009. But those circumstances were quite different than what we're facing now. I would also encourage you to sometimes just turn off the news. News, they are trying to sell headlines so they can sell advertisements. They don't do a very good job of making money if they don't sell propaganda, if you will. Now, sometimes the news is true and it's important to digest and understand, but oftentimes it's meant to shock, it's meant to create awe, it's meant to create clicks, and can sometimes create emotions or an overabundance of emotions that maybe we don't or shouldn't have to experience. It is quite common to have economic recessions. The Fed is tightening monetary policy. It's expected that the economy at some point would shrink as the Fed is tightening this policy and trying to pull the economy out of this high inflationary environment. All of this has occurred recently, and we don't expect for long-term investors staying focused on the long term that these will create negative outcomes in terms of meeting financial goals. So if you do have questions or concerns, we want to hear from you. send me an email, send us an email, give us a phone call. We're happy to talk with you and walk you through our thoughts and what we as a firm are focused on rather than what the news of the day really is. Take care.